Jerome is the Chief Strategy and Investment Officer of Air Senegal, the newly established flag carrier of Senegal. The airline has just acquired two ATR 72-600s and ordered four A330-900 NEOs, becoming the first African carrier to purchase new wide-body aircraft. Jerome.
Thank you, Laura. Well, I'm very pleased to be here, and thank you for the invite, Laura and Airfinance Journal. So, indeed, just a few words. Air Senegal is a newly launched carrier, as you mentioned. We are very proud to be one of the first acquirer in the continent of the A330 NEO. So that's a massive strategic move for us. Basically, today we operate two ATR 72. We just got one A319 joining the fleet last week. So that's a big move also. With our friends, Air Côte d'Ivoire, I know they're around. We cooperate together. And the second A319 is joining within 2 weeks. After, we're going to have the A330 NEOs coming actually next February, next year, and next June. And we're going to also launch the intercontinental flights with those aircraft, namely to Europe, to Paris, to start with daily flights. We are today state-owned, so we're going to address the state-owned or privately owned, what could be the best model. We are currently state-owned, 60 million euros capital paid up, so that's a good start. And we intend to open capital with private money, high-profile international investors. Basically, we want to raise up to 100 million euros in the coming years, not tomorrow, hopefully. And so we're going to open up to 49% to private investors. We intend to grow to basically a turnover of 350 million euros within 5 years, which for Africa is quite big, actually. That would represent, roughly speaking, 1 million passengers a year at that time. So that's a change, if I may say, of a paradigm for West African carriers or small African carriers, usually. And just finally, a little bit of background. So personally, I started my career as in an aircraft finance team with Société Générale. So this is my background. Then I was with some investment boutique, investment funds, and I was instrumental in the launch of 3 airlines, one of which was Air Côte d'Ivoire in 11-12. I did all the business planning up to the shareholder agreements. I'm still collaborating intensively with Air Côte d'Ivoire, which is a very great company. I'm very respectful, very admirative of what they do. Then I did the business planning for Congo Airways, the Congo-Kinshasa, RDC. And for this one, the government asked me to actually not only do the business planning and financial planning, but to implement it. So that was quite a challenge, because then you have to demonstrate that what you wrote was not totally stupid. So I spent 2 years with the Congo Airways as a deputy CEO and accountable manager. And today we are very proud. Congo Airways is a great company. I'm still advising the CEO currently. And Congo Airways, after 3 years, is doing $100 million turnover, 5 aircraft, and they've just been certified IOSA in July, making them the 32nd airline in Africa to be IOSA certified. And when you know that DRC is a blacklisted country, it's coming from a long way, it's, we believe, a great achievement. Finally, as regards the startup and airlines, I'm a member of the founding team of minority investors into Volotea, which is a startup in Europe. Actually, we launched in 2012. It is managed and majority owned by Carlos Munoz and Nathaniel Ross, that you may know, who were the founders of Vueling. And so after 6 years, we now have a turnover of 100 million euros a year, 32 aircraft, half Boeing, half Airbus. And we hit just very recently the 20 million passengers after 6 years. So hopefully I'll be able, Laura, and thank you again for the invite, to address those difficult questions, which are, okay, is it necessary to consolidate for small African carriers? Is it also to discuss the profitability issue? Yes, we have to face it. 80%, as you mentioned, of African traffic is served by non-African carriers. That means that the small African carriers, or African carriers, whoever they are facing big established players, dominant players. Second question in the topic is, what about state money? What about private money? So I'll be very radical about it. Well, right now I'm financed with state money, so I won't be too nasty about it. But you will discover that yeah, I love private money. And finally, yes, what about LCC, this magic word, LCC? In Africa, when will it come? And I guess we're gonna answer those questions. So I will propose you, for me, all those topics, all those questions, comes down basically to the idea of value creation. We do business to create some values. So the very question, the central question is how do we create and deliver value? What model to use? Consolidation, how we attain profitability, with who we partner, how we create value in Africa for new entrants or small carriers. That's truly the central questions. And this is why I have titled, by the way, my presentation, Investor Perspective, because I guess at least a rational investor, so the private investor, I guess it's very rational, and it will try to make sure that when you invest $1, it will have a return, $1 plus something. So getting into the shoes of the investors will enable us to very frankly, very honestly tackle a lot of those very rational questions. So let me start. So of course, we're gonna start five sections. What an investor looks for. Yeah, that's the very beginning of it. What's the problem in Africa? What could be, what we believe are really the foundation for making a successful airline. So we're gonna see 4 pillars. Why growth is very important. So I somewhat answer the question. I do believe when you're very small, it's very difficult in a globalized world to survive. Growth is key. Growth is key for your profitability, but growth is going to be essential to display a decent return to your investors. So for two matters, it is very important. And I will elaborate a little bit on private equity investment, what it could bring, and what we believe it could be a game changer. So investors. So let's be very straightforward. An investor invests just to make money. So when you pitch a project, a carrier, whatever, the only thing you have to tell them, that's easy, you're gonna make a hell of money. So that's the easy thing. So if you're smart, you make it implicitly, that's even better. But that's the question. So the second question is, okay, for an investor, he wants to be good investors, okay, what is a promising venture? What features, ingredients, fundamentals I want to see in a compelling case, in a compelling venture that I would like to invest into. And here again, I mentioned it a little bit, because this is one of your questions, making an airline profitable. It's not the end of the game. You cannot attract money if you're just profitable. You need to be profitable enough to display very large cash flows to justify the initial investment. If you invest $100 million and you have a profitable airline just displaying $1 every single year, obviously it was a very bad investment. So profitability is a condition precedent. Of course, it is how you survive, but it is not the end of the game. And when you go to seek money, it's not, I'm going to be profitable in 5 years. I'm going to be profitable largely enough to have cash flow to distribute to my investors. And here we go back to the issue of growth, which is going to be very central in my demonstration today. So when we said that, okay, what's a good venture? And I would like to enlarge a little bit the topic, actually. We talk about airlines, but airlines or other industry, I mean, we're facing exactly the same challenges and the same ideas. Whatever the venture you are in, be it Facebook, Uber, whoever you are, whatever you do, the fundamental is you need to create value. You need to deliver this value to your targeted customers, and you need to make sure you can monetize this value. Okay, so if I take the example of Facebook, the value proposition, the value creation would be I want to connect people, for instance. I want people to be able to share their stories. Okay, so I want to connect people. That's the idea. The way to distribute the value will be, okay, I have the software. Okay, so I build the software. So now it is tangible and I can deliver this value. Now I don't know my revenue model. I don't know how I'm going to make money. So what they do, Facebook, their revenue model is, okay, I will sell advertisement. Why? Because while connecting people, they have 2 billion active users. So they have a large audience. So they sell whatever, advertising, whatever they sell. So eventually, okay, they can create value, whatever they want, deliver it, and they can monetize it. And so we have a venture with good fundamentals. So it applies the same for us, for carriers, whatever, an LCC, whatever the continent. When you enter the market, okay, what is my business opportunity? It is there, and usually the key question for business opportunity is solving a problem. So any venture starts by solving a problem. So first you need to identify the problem you have. This problem might be, by the way, known or just unknown. I mean, mobile phone, I don't know, 20 years ago, 25 years ago, I don't know what it appears now. We had no mobile phone, but now that it does exist, it's very difficult for us not to use it, obviously. But when it appeared, we didn't even know that it was going to be so fundamental in our lives today. So a problem, known, not known. And the key point is to demonstrate that it is painful for your customer. The more it's painful, the better is the business opportunity. First point. Second point, it has to be large enough. We're talking about size. Yes, I mean, if you just target 2 people, we don't care. And this is, by the way, a big issue. In Africa, I mean, everyone says, hey, can I please go directly from A to B? But I mean, there's 20 people. So everyone complains, but I cannot make a compelling case, I mean, to put an aircraft, you know? So large enough, it's important. So when you have those 2 elements, a problem to solve. So for us could be, I want to decrease fares, I want frequencies, I want to increase safety, whatever it is, but you need to identify it. Well, you come and you come with your solution. And your solution, this is your unique value proposition. And basically this one has to be, and this is the case for us as a small carrier, it has to be quite unique, or you have to make sure that you have a sustainable competitive advantage. If we talk Air Senegal, one of the backbone of our development, at least in the very short term, is to tap the long-haul market. We're not crazy. We do it because there is no open sky. So we have bilateral agreements in between France and Senegal right now, and the market is big. It is served by 2 carriers, Air France and Corsair. Corsair using Senegalese rights. So we're just taking back the Senegalese rights, just rent to Corsair, but the market exists. The market exists. So I just go, it's a gold mine, okay, with huge yields on this route. So this is why I developed the Paris-Dakar route very rapidly, okay? And here's my bilateral agreements enables me to keep this competitive advantage, at least in the short term, as long as there is no open sky, or at the time I become a more established carrier. So eventually, yeah, this is all about it. Find your customer and monetize them and solve a problem. So when we've said that, just to wrap up, so an investment and any compelling case, basically it's a sound opportunity, it's a business model. And second, and I know that the financer before, they mentioned it, having a nice business plan or a nice business model, it is nice, but it is just very virtual. The key idea is to execute it. And it is true, I mean, the previous speaker mentioned, unfortunately, that in Africa, they see very poor execution, even on bright ideas. So yes, whatever investment, we used to say management is absolutely key. And we use even to call that an execution team. How are you going to deliver the plan? And those people have to be very operationally minded, especially in our industry, of course, which is highly regulated and operationally difficult to operate, but also very financially minded, And we need to have really the 2 components into the management team. And the other component to deliver your plan is obviously to have the money. But I put it in the way, enough money. We see so many plans, especially when I was on the investment side, case where they come and they say, okay, we're going to start an airline with $10 million. I mean, you know, I mean, the figures, I mean, that doesn't work. I mean, you just need 30 seconds to realize it is unrealistic, okay? And so, no, you need a lot of money. And we have here this sentence from Herb Keller, you all know, from Southwest. He said, and he's the Pope, so, of our industry, size your investment, then double it. Just to say, yes, we have uncertainties, especially when we're small, when the law of statistics of the big numbers doesn't apply, when you're young, it's difficult to assess the reaction of your competition and the like. You may have plans, sensitivity analysis. But as you mentioned also, previous financer, you can't have a plan and 1 year later come back to your investors or your shareholders and say, oh, I'm sorry, I was totally wrong by 30%. Can you give me back money? That's over. When you have a round of financing, you should be able to go to the next round of financing that you basically know in 2 years' time or whatever it is. And you can't have bad news very early. Otherwise, you just kill trust. So in Africa, so what's basically the problem? We know it. I'll be very, very rapid on that because I see the time's going fast. Yes, we all talk about, and we're here for that, great potential. We're very happy to hear great potential. I remember when I was a student 20 years ago in my university, they were talking to me about great potential in Africa. Yes, fundamentals sounds interesting, 1.2 billion, no traffic, 3% of RPK in the world, but there's no magic. Of course, there's no purchasing power. The good point is that when you look at the GDP, the propensity to travel, and you look at the GDP per capita, you see here on the graph a very steep slope. So as you have the GDP per capita increasing, you have a massive demand for air travel, consumption. You need a middle class, basically what it says. What we see in India, 500 million middle class, it's exploding. But okay, so great potential, good. As any investors, we're gonna look at, is it the right time to enter the market? It's a time to market. Again, potential, we need to wait for it to realize. So fair enough, potential. Okay, now let's face it, this opportunity is facing massive toxicity, if I may call it this way. Safety issues, honestly, now it's essentially resolved, if I may say so. Really, we have better statistics now, but we have a very toxic ecosystem for the entrepreneurs, for any companies. Actually, this is tax burden, this is infrastructure cost, mindset, and let's say it, corruption, or overprice, overcharge, call it whatever you would call it. Corruption is a massive and major issue wherever we are in sub-Saharan Africa. That's the very, very, very truth. And here I would like to say a word about the state money and private money. State money per se is not that bad, but state money in an environment where corruption, or so-called corruption, overcharge, is everywhere, it's killing you. It's killing you. Private investors, they won't play that game. They want to put $1 and they want to see it back, plus a margin. State money, it's blind, no eyes. They don't care a shit about it, unfortunately. That's the very, very truth. And we're facing this trouble, and I'm saying it's killing the development in Africa. So yes, no surprise, nothing to complain, nothing to be the victim of whatever, of a plot. There is no plot, there is no money because it is underperforming. Africa continues to underperform for many reasons, especially because there is no mindset of entrepreneurship, let's face it. But for many reasons, it's not a judgment at all, it's the fact. It is the way it is. While our industry is making world record profits, it's amazing, and you see it on the graph, still Africa is displaying losses. We have amazing margins in America, it's crazy, and everyone's making money except Africa. So that's the very truth, and I've just mentioned mispractices, mismanagement, you call it. We all know the issue. And at the same time, we have to be honest and not complain. Money is a commodity. Money is a commodity. There is no problem of money in the world. But we are in a globalized world. That means that we are just facing competition. When I come with a very poor project in a poor environment, nobody will bet $1. Full stop. Full stop. That's the truth. So money is everywhere. Money is a commodity, like knowledge has become in our era a commodity. Knowledge is a commodity. Now, Wikipedia, Coursera, whatever, you can learn a lot. But yes, we are competing against very more friendly jurisdiction, North America, Asia, whatever, and we're talking with the financier here. Of course, first, when they wake up in the morning, they don't want to look after a project for 10 million, okay, their time is precious. So they want big money, 40, 50 million, $100 million project whatsoever. And they don't want to be the one to be blamed just betting on a project where everyone knows it's very, very risky. They just prefer, as nice salaried people, to say, okay, I'm going to finance Singapore Airlines. Because even if it turns bad, they're not going to be blamed. I mean, everyone would have financed Singapore Airlines, full stop. So we need to come with a very compelling case. So that said, let's be a little optimistic, because actually, at the same time that we mentioned some very difficult picture in a way, at the same time, this is great. We mentioned to have a great business opportunity, we have to face a great problem. We have a great problem, so great. Can we solve it? Yes, the foundation for success are very well known. actually, and I'm just going to re-emphasize them here. No big secret. You're not going to learn a lot from me here. 4 pillars. Cost matters. Yes, but cost matters or die. I like to say that. Or die, yes, or die. Size matter, and I'm going to elaborate on that. It's very central, size, to the point of small carriers. Management matters, what we all say, who's going to be the execution team, and the mindset. And of course, investment. Investment, of course, at the end of the day, you need to make sure that before you start, you have been capable to gather enough money. Starting with half of what you need, you know you're going to hit the wall. It's a suicide. Okay, so cost, it's very easy to say, but it comes with, all those 4 pillars, for me, they are totally interrelated. You need to have the right mindset and right management to have a cost discipline. You know, it doesn't come, the size growing, having a realistic business plan, it comes all together. So cost, yes, here you have a very compelling graph. It says it's North America, chapter 11 are heavily correlated to the cost per seat. When they are high, by the way, okay, sequence chapter 11, they restructure, and they start again. If we talk about Ethiopian, and I had so many discussions with Tebolde, which is very inspirational for all of us, he always told me, Jerome, my secret is I control cost. Even when I have a 3-year contract with a company, after 1 year, I don't care I have a 3-year contract. I go back, and I say, hey guys, I have done my benchmark, and now it's 20% when I talk to your competitors. What are you doing? So either you're going to be fair, and we're going to renegotiate in a fair way, because now the market, for whatever reason, has decreased, and the price has decreased. Otherwise, okay, you want to play it bad? Okay, in 3 years, you'll be blacklisted. You forget about me, Ethiopian. I am Ethiopian. I'm in the largest carrier in Africa, and I'm making money. Okay? And so this is the way, cost discipline. It's very important. And when we have state money, unfortunately, usually, of course, nobody is accountable of nothing. So the cost discipline, they don't care. This is, again, why I have a big bias towards private money. So cost discipline, easy to say, but I mean, let's implement it. I have seen in my previous life, unfortunately, discussion at boards, and the guys only care about having the largest car at $100,000. I mean, this is absolutely not the topic, or about the fees at the board. I had a discussion with Tebolde also. If you know what he has to sit on the board, it is very reasonable, and this guy is just a brilliant guy. So I'm just amazed, political guys sitting at the board and just asking how many money they're gonna make. It cannot work. It cannot work. So cost is easy to achieve. So this cost discipline is easy with the right mindset, and comes back to your management and to who's going to be your shareholders. Size. Yes, 80% it is non-African carriers. True, so established carriers. Let's face it, our industry is facing a wave of consolidation, globalization. It comes with liberalization, it comes with foreign ownership control that are going to be released. And there is a big premium for big operators because they have this purchasing power, this dominant position. So on the cost, they are better. I mean, they can buy aircraft. When you buy 50 aircraft, of course, you pay them a lower cost. When you have a dominant position, you're better market penetration. Your unit costs are decreasing. So yes, it's a virtuous circle when you're big. So there's a big premium to big carriers. When you're small carriers, there's no way to really make money. We can debate it. Personally, I believe below the $200 million turnover a year, you are not reach critical mass. And you can crunch the numbers the way you want. Your cost per seat for the same thing is going to be very high compared to others. And so as soon as you face a competitor, it will kill you, unless you're on a niche market, on a monopoly. So size matters. And by the way, also, we see that in Africa, on the 20% remaining served by African carriers, just two-thirds of this market is served by 5 carriers. So it's already highly consolidated. Okay? So it's difficult, and you have to make a compelling case and show how you're going to grow and find a market. Management, okay, we said already quite a few things about it. Let me go fast. Meritocracy, I guess, is the only word to recall. Meritocracy. We love the son of the cousin, and we love the cousin and son of the ministers and the high-profile elite. But I believe that the first thing is the skills and the right attitude. So we need doers and not watchers. And just to maybe to illustrate my word, when you look at the very successful airlines, you're gonna find a few features. First, you will find entrepreneurs leading those airlines, so skin in the game, because for them, yes, they care about the customers, they care about their business, and not just about the paycheck. They have a long vision about it. And you also notice that basically you find scalability in those airlines because you will see that to make a return, you need to scale your business or to grow. And you will find also a lot of LTC into that because you need to disrupt the market. This is, finding your value proposition, disrupting the market to justify being in the market. And of course, coming from entrepreneurs, you have the right mindset. If I talk about Carlos Munoz, so we founded Vueling and we co-founded Volatile together. The guy, he knows every single person in the company. Even any flight attendant, he will see them at least half an hour. So the process will go. He will have a talk with them half an hour. So yes, a lot of hands-on. You can't escape that. You can't escape that. Okay, I'll go fast because I guess we're running short of time. Of course, the key things to look is having a strong vision. Yes, entrepreneurs, a good case is having commitment, faith. Sure, know your KPI. Of course, you need to be able to test whatever when we go before investors. We need to be capable to talk about our metrics. Yes, I know the in and out is not like, okay, we are senior position, so we don't know shit about what we're doing. No, we need to be able to talk about our metrics as if we're doing ourselves. We're a small company, so we know everything in our company. We have to be very focused about our return on investments. So whatever move we do, we have to question ourselves, am I going to create value or destroy value? Of course, there is no easy answers, but at least to question ourselves in good faith. Definitely, especially in Africa and anywhere else, any venture, by the way, when you do Uber, Airbnb, or whatsoever, you know the story of Airbnb. I mean, the guys, they were just eating, pasta for many years. You need to really be a little crazy, I would say, and to push the boundary. Otherwise, well, you don't shake the world. To be productive, again, back to the mindset. I've seen so many people, I mean, they do office hours. We don't care doing office hours. What we want you is to be productive. You can do that at the beach if you wish, or before the swimming pool, I don't care. But be productive, and it goes also with the next, I love this one, Abkelia. We have a strategic plan, it's called doing things. I think it says everything. It's the recap of the story. Bureaucracy, we need to fight bureaucracy or all those things. We need to be pragmatic, reactive, flexible. Again, the rules, and we are highly regulated, is here to help us to be better. Okay, we should not divert the rules just to block and to paralyze everything. Okay, and sometimes people say, no, the comma is not at the right place, so I do nothing. I was awaiting instruction. No, come on. So that's very important to have this kind of mindset. Customer care, I am forced to mention it. That's the key. If I don't say customer care, I cannot talk about any venture, as this is a kind of magic word. So yes, what we deliver, what we do to our customers, indeed, we need to treat them well. They are, while we're in the business, is to serve a customer, is to meet a need of a customer. So yes, we have to be very careful about that. Result-oriented, empower staff, again about the mindset. Especially in our industry, talking about customer care, who is interacting the most with our customers, our travelers? It's not us in our office at the second floor. It's the flight attendants, it's the check-in people at the counter. They need to be problem solver, innovative, smile, enthusiastic, very happy to serve. They have to have that, really, and be very happy to do their job. Of course, the ethical value, it's easy to say, but again, I mean, this is very important, and we make a very careful care when we interview people and when we recruit our people at Air Senegal. We discuss about values. You need to also embrace a company not only for what it is doing, but for the values it carries. We are creating a foundation. We are very involved in an NGO, in a hospital right now. It doesn't cost a lot of money for us. Thanks to this foundation also, we are going into the school with some softwares. It doesn't cost a lot for us, just half a day for a few of us. But I mean, it's part of building a culture, a company culture. And those values, I guess, it's not anecdotal. It's very, very important to bring that. And to continue, here you see Richard Branson, I guess, and Tony. Take yourself lightly. but you work very seriously. I guess this is the right word. And again, also hire for attitude and train for skills. The skills, anyone can have a skill. But the attitude, if you don't have it, you cannot train people to have the right attitude. It's done, it's over. Well, you have exceptions, but it's not our job to change that. Okay? Investments, so the final pillar. Yes, big growth. Of course, we need OPEX and CAPEX. OPEX will be with equity money, basically to finance the initial losses. And we need a lot of money for that. And we're talking usually in excess $100 million minimum over 2 or 3 years to grow enough. I don't see any, except you are in a very niche and small market with very specific condition. And you need CAPEX, and we are back also to the debt investors, to the financer. Yes, we need the product, well, we need the factory, so our airplanes, and we need to finance them. We are not going to buy them cash, and we need to finance them at the right price. So yes, it's very important to be able to tap on the debt instruments, whatever it is. And it's a big issue for us because, yes, we're coming from a position with no credibility, no market recognition. We have a bad reputation usually. We don't have good compelling case. We have not done our homework. We don't know how to talk about return on equity, valuation. This is an exercise that must be done. We can't present a case without doing that. We may be wrong, but we may present it, and this is a discussion we should have. And so, yes, we need to raise some debt. And for that, we need to do our homework and be a good student. Ecosystem, fair enough, we discussed that. Political interference, my previous speakers talk about that. I love to mention this graph, a courtesy of Nicolas Collin. I don't know if you know him. He's a great venture capitalist, Nicolas Collin. He wrote a great book, by the way, Hedge. Publicity, you may buy it. Basically, he did this graph, and to make a good venture, you need 3 ingredients. I love this graph. You need capital, obviously, what we discussed, know-how, the skills that you can get, and rebellion. This is changing status quo. This is how I solve the problem. And really, it says a lot. Capital, know-how, rebellion. I guess what we need in Africa is rebellion. This is the mindset. Okay? Know-how, we have it. Know-how, it's amazing. Young people, how amazing they are. The learning curve today is just amazing. They can learn whatever they want. Knowledge is a commodity. They are smart people. They are just amazing. I have nothing against old people, but working with people with the wrong mindset, I guess it's killing many things. You need to continue to learn during all your life. Growth, I guess I'm a little late, but I'm trying to speed up. I was done 5 minutes more. Growth, very central in all the speech to come to growth and to the issue of small carriers. Yes, growth is essential to reach critical mass and to be able to reduce your unit cost and to be profitable. But as I mentioned profitable is just the beginning of the game. What we want is to be large enough to have large cash flows. And I'm just going to, for the lover, because we are financiers, of crunching numbers. So I love crunching numbers. I'm an analyst by education. So, we're going to see. So first, just the fundamentals. I'm talking private money because state money, usually they don't care about it, unfortunately. So I take the example of private money. So private money, what they care of is economics, full stop, we mentioned. Of course, economics comes with control because you need to make sure that you can veto a decision at the board, you can force a direction and review. So control, so this is your covenants you're going to have in your shareholder agreement. So basically, the key metrics, roughly speaking, we're not going to debate that. Usually, a private investor, it's a 5-year horizon, 5-6 years usually, which is quite short for us in our industry, by the way. It's I don't know, 20% return on equity, they're going to seek, at least on the paper. Of course, if they're 12%, they're going to be happy, but at least when you present a case, you have to demonstrate 20% on the paper at least. And said in a more pragmatic way, 5-year horizon, 20% return on equity equals making 2.5 times your initial investment. So stated simply, I invest $100. I want at exit to have recovered $250. Wow, that's massive. when we usually know that in the past, in many airlines, you invest 100 of whatever, and you end up with 0. So that's a massive change. So yes, we have to grow, because when you want to grow your valuation by 2.5 times, I mean, you need to scale your business like hell, because we are not going to display 30% margin. There is no magic in the world. At best, you're going to do your 3 or 4% when you are in the top cycle, up cycle. So how you do? You grow your turnover. So you grow. And so growth is key. And a final demonstration. This is a demonstration for the number lover. Let's see that. 125 million equity investment. This is my assumption. And I will make it simple, please. So no round of financing. I put 125 million at day one. There's no Serie A, Serie B, no way. Huh? Then I say I want to exit, as we mentioned, 5 years. That's my standard horizon. My question is, okay, and I consider I'm smart enough, so after 5 years, hopefully I'll be more or less a mature company, being profitable, like a normal company, successful, 4-5% net profit, which correspond for you, for us, to about 80% EBITDA. You see 17.5% EBITDA, you see, the DAR, depreciation, amortization, and rentals, which is a good figure in our industry. So the point is, what should be my turnover to grow my $125 million initial investment to $250 million investment? And I'm very nice here because I just, as you can see, I just double it. It's not 2.5, just double it. So it's a 15% return on equity. The answer is, and whatever methodology you use, be it discounted cash flows, so intrinsic valuation or pricing with multiples and comparables, using enterprise value to EBITDA or even to sales, you come up with the same figures. The same if you take price earning ratio by 10 factor, you're gonna end up with a 250 million equity value when you do a 500 million turnover. $500 million turnover. This is almost scary when you consider the continent, because the traffic, the volume is very narrow still. So it is challenging. Of course, we have ways to do that, to increase that. So finally, final sections. It's okay on the time. Thanks, Laura. Private equity. Why we believe it's important. First, because when we want to attract private equity, we do our homework. So we come very humble, and we hope to have a compelling case to try to demonstrate a solution, to try not to bullshit and say, yes, there is traffic, I believe I can make it. So it's force you to do your exercise, okay? And state money, unfortunately, they don't ask you those questions. And that's a pity, because they just say, hey, let's make an airline, it's a great thing, it's an ego thing. And how much do you want? 50 million, nobody knows. Let's have this 50 million and make it running. No, it can't work. It works nowhere in the world. It will not work in Africa either. So PE investment, first, when you go before them, you don't want to look stupid, so you do your homework. Second, private money will help you bring the right mindset that we mentioned. They will pick up the right management or change the management otherwise. They will make sure that company culture is here, that you have people with the right skills and meritocracy, because what they want is a return on their investment. But for us, what's very important beyond that is to build a lot of features beyond the money, what I call certification, network, knowledge, and even financial benefits. Certification is what? Is they have big guys and they've done the homework themselves, their due diligence. So if they bet on you, you gain a lot of market recognition and credibility at first. You may be wrong. You may fail. Unfortunately, many companies, whatever they are, fails. It's not an easy game. But at least you, all of a sudden, you are on the radar. That's the very first thing. Second, of course, the network they can bring, and this network goes a little beyond. This is this kind of leverage and economies of scales. They will help you discuss with subcontractors, suppliers, whatever they are, because you will be taken more seriously. And because they are on board, you know, they will make an effort not to try to kill you from day one and be nice with you, because they also see a potential and a repeat customer. Knowledge, of course, they're going to bring a lot of their knowledge, being finance, M&A, whatever it is. And the financial benefits, beyond that, we're talking about equity, but I was talking about debt. If I have Sequoia on board, a big investment firm, then yes, I can go to you guys, financiers, and say, please, would you finance more aircraft? Say, oh, okay, you have equity investors, they spend a lot of time reviewing a model, more than we're gonna do, by the way, as debt investor. And so, okay, and so probably the cost of capital is going to decrease, and massively, because having interest rate that kills you, it's a short win. You're happy, you close your financing, but if you are 8 or 9%, I mean, it's a very bad gift for the next for the next years. So this is where we are. And finally, of course, be investors, and this is our job. It's complicated, it's difficult, so hopefully we have a lot of provisions, covenants, clauses to make, to enhance, in a way, the private equity investment to maximize upsides and to downside the risk. So could be redemption rights, could be liquidation preferences. So you have a lot of ways. Of course, it comes at the expense of someone, the previous investors. When you have all those clauses, someone is paying to some extent. But at least could be a good use of state money, since they are not that demanding on the returns. And again, and here you have a list, I'm not going to go for it, but you can read it, you can exchange on it later on, and two categories, economics and control. Of course, they want to veto, they want to understand what's going on, the drag along, the tag along, whatever you wish. And I'm almost done. Of course, the exits, not a lot of things to say here. A business, consolidation, you need to be able to exit, well, to have a liquidity event for investors, because especially the private ones, they are not here for life. State money has a longer horizon, and not private money. So, well, basically, always the same thing, private sale. So either a strategic partner, an airline, or a financial sponsor, like another, I don't know, a PE firm that is more in the mature growth, in the growth stage. Or the IPO. Well, the IPO is like the holy grail. But you need to be big. You don't IPO before, I don't know, 400 or 500 million dollar turnover. But of course, you need from day one to see a no reason. And you go back to your company case, to your growth, etc. All this story has to come from outset when you go see your equity investors, when you go seek your financing for your aircraft. All this story has to be told. So I'm almost done, Laura. So the recap, and to answer precisely now with all these food for thoughts. Again, so be aware, the key point is your business fundamentals. Solve a painful problem. Make sure you have a large enough problem. Have economies of scales. Make sure that you are going to go not to 2 aircraft for at least to 10 aircraft. 10 aircraft is basically 200 million for 10 narrow bodies. Otherwise, find a way to virtually create critical mass through a parent company, through a massive investors that will bring you power, purchasing power. Okay. Again, execution, management, board of directors, your board members, they should be able to stand here before an audience sophisticated as you are and talk about valuation, return. This is their job. They should know this high-level story. If they can't, and by the way, we are very lucky enough to be advised in our equity. We're going to start the roadshow next month, Bank Lazare, which is very famous, we're very humble and very happy to have this highly recognized institution to support, to have done the due diligence and to believe in Air Senegal. And I said, I mean, our upcoming investors are doing the roadshow. We want them to interview our board members also. It's not just the management. Management, we also spend a lot of time with board members, and we have to be on the same page and talk the same language. Governance. We have to be very strict on that. We are a bit big fighters of corruption. Personally, I am. I have a lot of enemies also. But my enemies are corrupted, so I'm happy to have those enemies. 2 great books, by the way. We are with Lazare in a great book. I don't know if you know the former Minister of Finance of Nigeria. She wrote a wonderful book. It's called Fighting Corruption is Dangerous. The story behind the headlines. She released the book 2 months ago. She's such a wonderful person. And also I have my great, very inspirational person, my former Minister of Transport, when I was in Congo, still a parliament member. He has just released a wonderful book also about anti-corruption. Very courageous, very brave. Yes, this is very important. And okay, corruption is really maybe too big of a word, but when I say that is not to have overcharged or overpriced, you know. People believe, oh no, but you pay twice the price, no big deal on this or that. No, it's killing you at the end of the day. Know your value. Yes, because it's an exercise that is make you very humble. Each time, even if you don't go on the road shows, do I destroy, do I create value? Just do your math, whatever you believe they are. And eventually, to conclude, yes, strategic investors, they bring to you so much things, the benefits, the recognition. Yes, alliances, you can't be on your own, to be very direct. I don't see a future with a 10 aircraft company. The world is like that. Only now we are in an era of digital era. A big company, whatever the industry, Amazon is killing the retail, yes. Uber might kill the taxi industry. Airbnb is doing a big damage to the hotel. When you think Airbnb, it's a 10 years old company, it is worth 40 billion, more or less, some say 60 billion. Accor, which is the number one in Europe, is worth 10 billion or 12. And Marriott is worth 40 billion. Marriott is number one in the world, 90 years old, almost a century. And those guys, a 10-year-old company, has a valuation higher than they are doing. With 100,000 accommodation, Accor has 700, and probably Marriott in excess of 1 million. So yes, consolidation. So build a nice small carrier and be attractive enough to be sold. Yes, to be sold, or at least a part of you sold to a bigger guys, be the big financer or strategic an airline. You may retain your brand, but that's going to be probably the game of tomorrow. So we are very keen. We believe on. I'm working also a lot on having a funds for Africa and just taking minority participation in a few potential stars. Air Côte d'Ivoire, we hope Air Senegal will be one, and a few others. So just going to be 10 of them probably in Africa in 10 years or 15 years. Let's be realistic. So we want to invest, being minority participation, bring capital, minority, bring knowledge, bring certification, and cooperate. This is what we do today with Air Côte d'Ivoire. We're so proud. This is the vision of our president. We're very lucky to have a great president in Senegal. And the first thing he asked us, please don't make war with other airlines. Let's be humble. We are an outsider. We're coming to the market late. Still, we believe we have an interesting market, being a big economy. Senegal is quite a big economy, 7% growth, a very stable country, no coup since independence, so they can play a role. And we have a strong partnership with Air Côte d'Ivoire. Actually, we are even leasing an aircraft from them. And we're gonna have a spare aircraft together, spare part together. We're gonna exchange in the future pilots. We are talking with the two civil aviation. And we are trying to create, two companies that are going to be important in the next years. Well, thank you, Laura.
Thank you very much.
I hope
Jerome,
I wasn't too long.
No, that's
Thanks.
great. Let's open it to questions from the floor. Are there any questions? We have a question up front. Thanks. It's okay.
Can you hear? Hi. Hi, Jerome. Very interesting. I loved everything you said.
Thank you very much.
Many thank you, Jerome, for that. We are having a lunch after this, so anyone that has any further questions, Jerome, if you're going to be at the lunch, you can carry on with that. And then, but thank you very much for your presentation, Jerome.
Thank you, Laura. Thank you for the invite. Thank you all.